The COMEX ran out of physical gold and silver to meet its contracts because its contracts now want delivery rather than just extend and pretend and leverage shorts.
Now through Monday, April 7th, in honor of Silver Squeeze 2.0, for any Monster Box of Silver Eagles, we'll give you 2 additional Silver Eagles at no cost. And unlike some other Silver Squeeze deals, there's no limit. So if you purchase 1 Silver Eagle Monster Box, you get 502 Silver Eagles. If you purchase 10 Monster Boxes, you're getting a full tube of Eagles for no cost. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're delighted to have this returning guest. Matthew Piepenburg, an analyst and the head of research at Von Greyerz, is here again with us. This is Thursday, March 27th, 2025. Matthew, from your home base there in Switzerland, thank you for joining us again on Liberty and Finance.
It's always a pleasure, Again, good to be here. Always lots to talk about.
Reminding my audience and viewers and subscribers that we had the good fortune to meet in person at the Rule Symposium in Boca Raton, Florida, and had an extended conversation on their dinner cruise there. Got to know each other a bit better on the personal side as well as professionally. You're based in Europe, and you have close relationships with high net worth individuals and family foundations, et cetera, that are trying to protect themselves from economic upset that always seems to be getting closer and swirling in signs of it around us, and certainly destruction of the currency happening right in front of our eyes in real time as we watch. There have been a lot of concerns recently about record flows of physical metal, gold and silver, out of the London vaults, some of it going towards New York, record inflows and outflows in New York. And wanted first I think we touched base briefly with you on that about a month ago, but if we could get your latest observations on that phenomenon and people's concern about what it means if it seems to appear that it's like near the end of a game of musical chairs where everyone's suddenly grabbing for a chair. What are your thoughts on that?
Yeah, this is a really important topic. I've been traveling a lot this year, and I was in a symposium down in Cape Town. I was obviously at the VRIC where I bumped into Andy Scheckman, another mutual good friend, and certainly Andy. We saw him in January. He tracks these flows very, very well to the decimal point, really, and it's a topic that's not just important about gold price movement, but really what it's saying about the condition of the world. So it's a very important question, and it's a topic I've spoken a lot about in the last few months, but really I've been writing about since 2020, 2021, this thing called the COMEX, or these exchanges, or what does it mean when flows come in and out of the COMEX exchange, out of the LBMA banks, these big bullion banks, what does it really do? You could spend hours on it, but to keep it simple, and not stupid, but simple so it's understood by people who don't have time to look at the derivatives or what open positions mean or what good stand for delivery means. In a nutshell, this exchange in London and this exchange in gold, in New York, the COMEX, they're not gold storage facilities or really gold markets. They're credit instruments, they're credit exchanges where a lot of leverage is allowed. So you could have a 4% physical gold and 96% of a contract being 96% leverage and 4% actual gold, and you can use levered longs or levered shorts to move the gold price pretty dramatically. And my argument has always been, since I started writing about this in 2020, that the main purpose of the COMEX, which came to fruition in 1974 for gold and silver, was to keep a permanent short on the natural supply and demand of the natural price of gold and silver. The vast majority of contracts on the COMEX, for example, are long gold, long silver. So you would think if that's true, if the number of contracts are long, then the price of gold should be long. They use futures or forward contracts to set these prices. But it only takes about 8 or 9 larger bullion banks to have net short positions with massive turns of leverage. And so you may have more contracts long, but the net volume of contracts short is significantly higher. It's almost every morning at 8:30 you see the price fix on gold or silver. And it's not a conspiracy theory. Anyone who understands the commodities market or these exchanges knows that it's legalized price fixing on the COMEX since 1974. And it's just, and most of these contracts don't actually stand for delivery. You know, you're shorting or going long. You don't take delivery of the physical gold. You just extend the contract or reuse the contract. There's no actual physical delivery. So this game of levered longs or particularly levered shorts has just been going on for decades. And what's fascinating about what we're seeing since November, really since the Trump elections, and then certainly since Trump came into the White House, is the number of contracts standing for delivery, in other words, asking for actual delivery, has gotten so much higher that there's not enough gold at the COMEX to satisfy delivery, because delivery was never the intention. It's a long-winded way of saying the world wants its gold within its own zip codes, within its own control, and no longer a part of some paper churn and burn or extend and pretend that's gone on for decades. And the reason they want that physical gold and that physical silver is the world is changing at such a dramatic and negative pace, and because there's so much concern of banking risk, currency risk, and geopolitical risk, that it's an open symptom of we need our gold. We're done with this contracts game, this extend and pretend game, this levered game. We want the physical gold. It's the same with silver. It's actually in some ways more of an interesting story, which we can get into. But to try and make it simple, again, for people who can certainly spend hours in the complexity of this, and there's some who know very little about it, the COMEX ran out of physical gold and silver to meet its contracts because its contracts now want delivery rather than just extend and pretend and levered shorts, which causes a problem. In my opinion, the 400 metric tons of gold, for example, that came from London to New York since November and counting has really been there because the COMEX in New York didn't have enough physical gold to meet its delivery obligations to the counterparties. And they didn't have enough because, again, counterparties are actually doing something they haven't done in decades, which is get their gold, want their gold. And as I've warned since 2020, this game of legalized price fixing on the COMEX would stop once the demand for physical gold outpaced the need or the ability to short it on the COMEX. And that is what we're seeing throughout Q1 of 2025. And that is a symptom not just about currency risk and banking risk, but certainly about geopolitical risk. When you see this much demand for gold and you see this much gold coming out of these otherwise fixed price fixing exchanges, there is a seismic shift in the world happening. Again, that's not a gold bar argument. This is to track the flows, understand the common sense. And it's no coincidence that as we're running out of the price fixing capacity at the COMEX, gold is reaching all-time highs. The ability to keep price fixing is getting weaker. The demand from central banks, in particular from the East or from large counterparties on the COMEX, is getting higher. So that once safe and sound little price fixing mechanism in New York is losing its teeth. And the reason you're seeing inflows into the COMEX to fill the demand and outflows to fill the delivery contracts is actually just more and more of the case. It's not like the COMEX is reloading its gold and silver to continue its price fixing. It's just trying to meet delivery, good for delivery contracts. And so that has huge ramifications on not just the price of these metals, but also how the world is feeling. And when gold is hitting all-time highs, that is always a dangerous sign. Even if you love gold as we do, and for the reasons we do, it's always a bittersweet schadenfreude because, as we've always warned, and when gold reaches new all-time highs and counting, that's because the world and the currencies and the debt levels and the social unrest is getting worse as well. Because there is a flight to safety. Gold is the last resort for a lot of these realizations that sovereign bonds, U.S. treasuries, checking and savings accounts aren't going to be the safe haven. It's going to be this barbaric pet rock, this analog asset, gold. So this is a long-winded way of saying gold is getting much more important because things are getting much more desperate, and the ability to price fix on the COMEX is getting weaker and weaker. So all these things are converging in the silver market. For the silver price, nearly 50% of the silver that was once on the COMEX to allow this price fixing is just not there anymore. It's just not there. So you can't price fix silver as much, and there are massive bullion bank short positions right now, and they're naked shorts. That means they borrowed this gold to short the position. Short means bet against the price. Meanwhile, the price is getting higher, so they're in a short squeeze. What's borrowed has to be given back or paid back. They're going to have to cover those shorts with silver they don't have, or it's going to be much more expensive. And when that short squeeze comes to fruition, and it's in the process of that, the price in silver just on the short squeeze is happening in these bullion banks should be dramatic. The other thing, again, about silver, looking at the COMEX is just one way to kind of predict the trouble these counterparties are in, because there's just not enough silver there to continue the price fixing game. If you look just on the technicals, you've got a 14-year rounded bottom on this cup and handle. You can look at technicals all day long, but when that breaks 50, the prior highs, silver should skyrocket. And of course, when the DXY on a relative basis gets weaker, silver should skyrocket. So it's all connected, Donaghy. It's a long-winded way of saying between what's happening in the COMEX, what's happening with the LBMA banks and these naked short positions, in particular with silver, where there's not enough silver there. Natural laws of supply and demand are fighting against these old-fashioned systems using forward or derivative contracts to price fix. That's all getting weaker and weaker as the world is getting more and more indebted, desperate, geopolitically worried, as more and more fears rise socially, again, economically, politically, and just on U.S. sovereign bonds or European sovereign bonds. The world is realizing what we've been warning for years, not the end of the dollar, not the end of the U.S. Treasury, but a move away from it, because the issuers of these sovereign bonds aren't as trusted anymore, especially since we weaponized that in 2022. And in addition to weaponizing the world reserve currency, we've gone massively into debt at every turn. More budget deficits, more trade deficits, more balance sheet on the Fed, and more national debt. It's just not the same trusted IOU that it used to be. So all of these things are connected. I'll pause there, but it really has a massive impact on the long-term direction of gold. Never in a straight line, or silver never in a straight line, but we're reaching all-time highs for a reason. Things are collapsing at the COMEX for now. There's not enough gold and silver to continue what they were doing for decades, since I was born, basically. And the world is getting more and more afraid of the U.S. dollar and more nervous, for right or for wrong, about Trump policies, about Trump decisions, about political instability, geopolitical instability. All of this is connected. Everything you pull on comes from debt, whether it's the COMEX, whether it's geopolitics, whether it's tariffs, whether it's currencies, whether it's bond yields. It all comes back to the simple theme of debt, which is finally becoming more and more understood by the mainstream now. Certainly understood by the central banks of the East and the counterparties in the COMEX. And they see the writing on the wall. They're basically trying to get their shovels ready before the snow, and they're taking their gold and silver out.
You mentioned the East several times in here, and talking about the Western exchanges being dominated by this derivative paper trade mechanism for the last several decades. What about the Eastern markets? These cash and carry physical markets that are not cut from the same cloth necessarily as the Western markets that we've been discussing. What about the dichotomy between those? What's going on there? Have they been just biding their time? We certainly saw some arbitrage open up as far as different pricing emerging over the past year at different times on silver or gold there. But what do you see playing out now, the trend of the rise of the Eastern cash markets versus the Western markets?
Yeah, and again, I want to try and keep it simple, but also not ignore the complexity for those in different understandings. But again, and for the simple part, remember the story we grew up with of the three little pigs, the big bad wolf and the three little pigs? And one pig was slowly building a brick house and, working really hard. And another pig was building a straw house, and the third pig was building a mud house. And so the straw house pig and the mud house pig were just kind of whipping it together, worrying about the next party, playing all day, out having fun, not worried about the big bad wolf. While that other little piggy was really working hard to build his brick house, saying, I'm very worried about the big bad wolf. And to kind of enter into this question you posed, what I'm saying, what I've been arguing for years is the East, which is no stranger to suffering and no stranger to being the dog wagged by the tail of the U.S. dollar, forever debased, forever inflated, and they've imported that inflation. Whatever the Fed or the U.S. dollar, whatever the Fed did to the U.S. dollar with interest rates, et cetera, money supply, the rest of the world, in particular the East, had to react similarly. So they were always being affected, influenced, and really beaten down by the U.S. So the East has been like that little piggy building the brick house. They know at some point they can't sustain this system of being led by the dollar And they know that eventually watching U.S. debt levels rise exponentially with every administration, red or blue, and looking at the way the U.S. economy is really based on debt rather than GDP or production or manufacturing, because that's been outsourced to Central America and primarily Asia and China in particular. You may have a lot of things you don't like about the East or Russia or certainly China, and I'm not in favor of living there either. But one thing they're not is stupid. They're very keenly aware of our history. They're very keenly aware of our central bank monetary policies. They're very keenly aware of the unsustainability of our debt-based system. And so they've been quietly building the brick house with bricks of gold. They've been stacking physical gold. It's not reported by the World Gold Council. We can get into that conversation. Because they don't think 10 seconds ahead or 10 weeks ahead or 1 quarter ahead or certainly 1 election cycle ahead. They're thinking much further ahead. And they've been doing this really for decades, in particular since 2014. They're not planning for the end of the U.S. or the end of the world reserve currency or the end of the dollar and it all going away. They're planning for seismic shifts in geopolitical order or disorder, the new disorder. And one way to prepare for that snowstorm and getting those shovels is building that brick house of gold. I mean, we can joke about it, but it's true. Gordon Brown got rid of gold in the UK in 1990 because, hey, everything's safe. The wall is down. Russia, Soviet Union's over. It's all us. It's all the West forever and ever. End of history. Francis Fukuyama's book, etc. That was hubris at the highest order because it wasn't all over. It was just a turning point. And for the last 30 years, as the U.S. particular and the West in general goes on a modern monetary theory debt-based growth system, the East has been biding its time, stacking its gold, and waiting for the U.S. to shoot itself in the foot, the arm, the face, and the shoulder. And that's where we're at because the U.S. and the West don't have as much gold as the East. Their currency is being debased as we speak. Their debt levels are getting higher. Their deficit levels are getting higher. And there's no manufacturing within their own borders because they've outsourced it for cheaper labor in the East. You can blame guys like Apple's CEO for that. We can talk about what he's doing now. But again, the East, to answer your question, isn't brilliant, isn't safe. There's all kinds of problems in China with a lot of things we can get into. Their banking, their bubbles, their a lot of things. But one thing they're not stupid about is understanding the end or the change in the U.S. dollar, the debt levels that were unsustainable, the change that is not just coming but happening as we speak. They've been building those brick houses. And the West and the U.S. have been building straw and mud houses out of debt. And when the big bad wolf comes and he's at the door and he's huffing and puffing and he's about to blow the house down, we're looking for all kinds of ways to solve it. Doge, USAID, a Bitcoin strategic reserve, maybe war as a distraction. We could go on and on about what our options are. None of them are good. But the East is doing this very quietly. It accelerated in particular after we weaponized the U.S. dollar. Eastern central banks are buying about 118 tons of gold a year pre-Ukraine war, pre-sanctions. Since the sanctions, that number is almost up to 290. So it's not just me making this up. The BRICS and the East are just accumulating gold. I've used many analogies. It's like accumulating ammunition before you go to war. It's accumulating nuts before you're a squirrel going into winter hibernation. They're preparing for change. And they're preparing not for the end of America, but the end of the U.S. dollar's hegemony. And the only people that aren't really aware of that are many people in the West who are distracted by transgender bathroom debates or who's going to win in the Super Bowl or who's going to win the election. They're not being taught by the media or by their financial advisors about currency risks linked to debt risk. And I think thanks to platforms like yours and many others, that's becoming more known now. Person by person, one individual at a time, you get past all the debates, left versus right, black versus white, straight versus, trans, all the things we're distracted by. And we get down to the real elephant in the room, which no one is talking about, is like a family or a company going bankrupt. The USA is in a massive debt pickle. Its currency is in a debt pickle, and the world is moving away from it. And we're distracted by a lot of noise. The East, they've been seeing this coming for years. And since 2014, they've been dumping U.S. treasuries on net and stacking U.S. physical gold on net, physical gold on net. And really since 2022, when we weaponized the world reserve currency, the dollar, and took Russia's reserves, whatever you think of the war, that's neither here nor there, the weaponization of this neutral reserve asset only accelerated all these things that were already in motion. So again, I'm not saying China and Russia have won, the yuan is going to be the new world reserve currency, and America is going to disappear. No, but the world is going from a monopolar system to a multipolar system financially. It's clearly not going to be the U.S. in charge like it used to be. All of us, left or right, can agree on that. We're desperately trying to come up with blame or solutions a little bit too little, too late, in my view, regardless. We can go into that. But all of this comes from the fact that the West has been building these mud and straw huts, and the East, despite all its many flaws and many problems, and the BRICS Plus and the East, have been slowly stacking, gold and building a brick house. And now as that big bad wolf comes, they're more prepared, ironically, than the West. And so these are undeniable factors. And, the question is, what can the West in general do, or the U.S. in particular? We can get into that. There's a lot of things they're trying to do that are making headlines. I'm not against most of the things they're trying to do. What I am saying, as I've said even before the election, it doesn't matter who's in charge. Even if it's an aggressive person with aggressive ideas and aggressive headlines, I've said Santa Claus can't fix this. A pack of baccalaureate, geniuses couldn't fix this. Nobel Prize winners couldn't fix this. We're going to face austerity like we haven't seen. Again, not the end of the world, but a very, very different 10 years ahead than the 10 years behind, because the debt-based system of solving a debt crisis with more debt is simply falling apart all around us.
Bringing that down to the individual household level, a lot of people are concerned about, Social Security, the other entitlements that they may have been looking forward to, and things that they've been paying into or whatever, basically IOUs, and realizing that every dollar we have is an IOU and that sort of thing. What is the impact on other institutions perhaps below the federal level, such as insurance companies, pension plans, endowments at colleges and universities, hospitals, churches, etc., homeowners associations? So people who are looking at their retirement or their savings, their nest egg, if the shepherds of those endowments and funds and nest eggs are still thinking the way the West has been thinking, that the next 10 years is going to be like every decade of the last 10 or 40 years, versus are there forward thinkers that are being more like the smart third pig that's building a house of bricks, or on behalf of the people that they're shepherding funds for?
It's a really good question. It depends on each manager of each pension fund or each sovereign wealth fund or each family office or each we can talk about Social Security in particular. That's not as managed nearly as well. Again, if you step back and look at that, because it is a devastating reality, and it's a very important question for the man on the street. The rubber hits the road now. When you look at how, again, all threads go back to debt. When you look at entitlements like Social Security or Medicare, when you look at military spending, and when you look at an interest on our IOUs, Uncle Sam's U.S. Treasury, combined, the cost of that per year is well over 120% of our tax receipts coming in. So America cannot afford its own entitlements, its own interest on expense, and its current military budget. And so Social Security is in that mix, right? So Social Security, in its own little kind of silo or vertical, is under tremendous threat. Of course, you can solve this by printing more money to cover whatever delta or gap is missing. And you can do it budget neutral, they say, with a big. But whenever you solve a problem by expanding the money supply, you dilute the money that you're creating and that you're handing back out. So you're actually really stealing from Social Security, and you're stealing from savers when you run negative real rates or financial repression, or when you debase the currency. And when, the interest rates and the inflation rates are so separate, even though we say we have positive real rates because inflation is contained and yields on the 10-year rates are higher than inflation, that's just a lie. Inflation is at least 12 to 13% using the honest metrics. And we all know this, but it's not official, but we know this. So what the government has done is openly lie to you by telling you that, we're beating inflation when we're not. And by telling you we have positive real rates, but what they're actually doing is financial repression, which is the oldest trick in the book. Inflate your currency, have an inflation rate that's higher than your interest rate. And basically, for savers, that's destructive. It's very destructive. And so the short answer for the Social Security group, they're already being robbed from, just like every man on the street is being robbed from. When you add up what you're paying and what you're losing to the invisible tax of inflation, what you're paying in your actual income taxes every year, what you're losing in your savings, and as the cost of things get higher, no matter where you look, whether it's a new Ford truck or a house payment or a mortgage application, which by the way are down 60% year over year, that's a huge indicator, which everywhere you look, the man on the street is getting beaten down. Now, when you talk about maybe you're in a pension fund or maybe you're in another fund that's trying to help you fight this thing, a lot of these sovereign wealth funds or pension funds and banks in particular own a lot of U.S. treasuries, right? And so if those U.S. treasuries, for a number of reasons, lose value, we saw what happened in 2023 to banks that held too many U.S. treasuries that were losing value. That was their nest egg. And as rates rose, the price of those bonds lost. So on balance sheet, they were going bankrupt. That can happen if rates rise. And we could talk about why rates can rise regardless of what the Fed does. So those are massively at risk. Again, take out my quote unquote gold bug perspective or my gold bug bias. Just look at the bond market. We can ignore gold and silver for a second, and you can still see this. So it is still relevant to anyone who's relying on these shepherds, as you say, to guide them when they're just guiding them to a cliff, whether they're conscious of it or not. I can't imagine they're conscious of it. But a lot of these sovereign wealth funds or pension funds by law or by their investment policy statements think they're being smart by holding safety in these safe haven assets, these risk-free return U.S. treasuries, these sacred cows of safety in a crisis moment. But if you look under the hood, the risk-free return of a 10-year U.S. treasury is really return-free risk when measured against actual inflation. You're already losing. You're not just running uphill in roller skates, you're sliding downhill in roller skates. That is not a gold bug case. That is a bond market case. That is a currency case. That is an interest rate case. And that is an open secret and an open lie. And it's not the first or the last to come from on high. And that's why we're having so much tension, because what the man feels on the street, he or she knows. It's very different what the CPI or the Bureau of Labor Statistics or even the president du jour or the congressman du jour says. Whether they're well or bad intended is irrelevant. You know it, you feel it, you see it. I was talking to my mother who lives in a very modest town in Michigan. And this actually made me very sad, but also just so proud of Americans. It's my hometown. And there was a sign where someone said, we'll wash your car. Pull in, we'll wash your car. Because Americans will look always for a solution. They're not getting it from their government. They're not getting it from their central bankers. They're not getting it from the official CPI scale. That's the America that I love. I mean, it makes me emotional. Because I come from that town, and you see people who are working 2 jobs to pay rent. I live in the south of France. I play polo. It bothers me, but that's where I'm from. I'm sorry. But she told me that story because that's the town I come from. These are the people I went to church with. This is America. But they're being lied to, and they're being robbed. And again, I realize that they can't all come to Zurich in my new life and buy millions of dollars worth of gold. I know that they can't think that way. I know they don't have that option. But they'll fight and they'll try and they'll work. But they are being lied to. And it makes me very angry. The inflation scale makes me very angry, but they'll always try. And they're so much more honest and so much more effective than their governments. That goes back to your point. The shepherds, for whether they do it intentionally or unintentionally, are not shepherding their fiduciaries in the right way. And that starts from the central bank down to our government. It's certainly to our U.S. Constitution, which I'd love to talk about, has been completely it's become a museum piece rather than a guiding principle of sound money. We've gone away from Article 1, Section 8 and 10 of U.S. Constitution, which made gold sound money. Why? Because the framers of our Constitution, flawed men, but the framers of our Constitution were not stupid. And whether it was the Declaration of Independence or the Constitution signed later, their number one premise was beware of predatory governments, dishonest governments, tyrannical governments. That was what was supposed to guide us for the next centuries. And what we've done step by step, whether it's through legislation, whether it's through the Supreme Court, and particularly with respect to sound money, we've completely thrown it out the door. And I could go in a 5-minute history of how that's a fact, not just a statement. And so we have betrayed our Constitution. We have betrayed gold and silver. We have betrayed our population, who are always the first to get drafted. It's the middle class, and they're always the first to get just shellacked through inflation, this invisible theft. And they're literally putting signs on their front yard to wash cars, to try and get through, to take care of their families. That makes me very angry as a person who left that modest little town, made a lot of money on Wall Street, lives very well in Europe. I never forget that. I don't say that to puff my chest. I'm saying that doesn't feel right. It just doesn't feel right. And your viewers and myself and my family, we're all aware of this. And it's time that, it's time that we're aware. I don't know how we hold it accountable because the options facing the U.S. are so bad. Was it default? We can go to why that's a bad option on our debt. Go to war, that's a bad option. But anyway, Warren, that's a pretty common option. When things are bad, debase your currency and go to war. And we seem to be knocking on that door everywhere in the world. That's another, I think, insult to American citizens, most of them who don't want to send their sons and daughters to wars where the politicians certainly themselves aren't fighting these wars. So we could go to war, we could default, or we could just do what's called financial repression, inflate away our debt. And that's what we're doing now. And that always hurts the middle class more than anyone else. Because if you're at the very other extreme, if you're an illegal asylum seeker who's now legal, getting a handout for $60,000 a year for doing nothing, or you're getting welfare, well, you're miserable, but at least you're surviving. If you're in the top 10%, well, inflation hurts, but I've got a stock portfolio, gold account, and 2 houses paid for. So that doesn't kill me. But it's the guys and women and the men and women in the middle class, 20% of whom their entire first job is just to pay rent, so they take a second job to have anything else. Those are the people that are losing. And instead of getting mad at their governments, their central banks, and their politicians, they're fighting amongst themselves. They don't even see it. And that's intentional. Keep the masses distracted and divided. Keep faith, keep family, keep sound money out of the discourse. And everything's relative. There's no absolutes, whether it's God, whether it's country, whether it's money. There's no absolutes left. So everyone's just really, really suffering. And it's terrible to watch. And by the way, it's happening here in Europe too. I see it in the UK. I see it in France and in Switzerland. Not so much in Switzerland as I do in France, Germany, Italy, or Spain. There's a lot of reasons why, but it's no different here. There's a lot of the same tensions and a lot of the same theft and a lot of the same dishonesty and entirely the same move away from sound money and from gold and silver at the political level. So individuals can become their own individual private central banks by trying to protect the debasement of their currency, by owning some silver and gold, not speculating in silver and gold, owning it, not to get rich, but to keep from getting poorer. And that's the real crime. If you can speculate in Bitcoin, we could talk about it all day long, and sure, maybe you get lucky. There's desperation in that, but there's also understanding in that. But if you're just trying to not get poorer, you've got to protect the purchasing power of your dollar, and your central bank isn't doing that. Your government isn't doing that, so you have to quote unquote stack gold and silver. And that can be hard when you're trying to just get through the month, but anyone can afford a few grams. And that's what you've been arguing. Elijah and I, myself, Andy, and countless others have been trying to say for years. We've been trying to build this little brick house, or a fancy brick house or some modest brick house, but accumulating gold and silver, not because we're cuckoo, but because we've seen simple math and history. And it doesn't mean we're not patriotic, quite the opposite. But if you can't count on your shepherds to take care of you, you've got to do it yourself, like that guy in Stevensville, Michigan, with the "I'll wash your car" sign in his front yard. He's a freaking hero. It's a freaking hero. I love this. I love that story, but it's also heartbreaking.
Before you confessed to getting emotional, I was already getting emotional on this side of the microphone. So anyway, about that, sir, about the human spirit, about the American spirit. That we've proven our adaptability and our ingenuity through many trials, and certainly it looks like we've got trials ahead. One of the things that you spoke that just rang a bell for me was this hidden tax, this dishonest tax of inflation, because people feel the pain, they feel the pinch, they feel how life has become more difficult. Young people are feeling disempowered and disenchanted and demoralized as far as why even go to work if you can't get ahead. There's that idea of losing hope, losing faith in the future, that there's a better future for me if I just apply myself, etc. So we'd love to get back with you on that, because when people are feeling more and more desperate, and that's likely given the mathematics that you asked, too little too late, we want to get back to that next time we speak. But that idea is when people get anxious enough and desperate enough and they're being lied to, it can be very confusing to the individual about, well, what is the real cause? Something's wrong, something's broken, and the ones that are in charge are telling me they're going to tell me what the problem is, or they're going to tell me it's over here, it's over there, or it's me, or it's one faction of us or another. That's when things can get really ugly, both domestically and internationally, when people feel desperate and then they're being told by those on high untruths about where, not like, well, okay, here's what we actually did. We and our cronies before us actually got us into this mess, and now it's baked in the cake, and here's the way out, but it's going to hurt, but we got to get out there. It's got to be honest. It's got to be based on honesty. So we're going to talk about that next time. The hidden taxes, too little, too late, desperation, and the U.S. Constitution 5-minute lesson. So Matthew, if people want to follow your work between now and then, our next visit, where should they stay plugged in?
Yeah, so goldswitzerland.com or vongreyerz.gold. It's a harder name for a lot of Americans to spell, but goldswitzerland.com has always been our URL for our website, and the articles of myself, Egon von Greyerz, Ronnie Sturfula. We have a lot of good stuff. I know Egon just published one today. I'm going to do a piece on the Constitution and money. I'm going to do that. I'll put that out next week. But all our articles and videos and interviews can be found there. And it's a good education. Our minimums are very high. It's not for everyone, but our message is for everyone. Gold and silver is for everyone. And we've been writing about this for well over 20 years. Egon is an icon in the space. We talk not only about why gold, but how you should own it and how you should not own it. And those are important things too. It's all free at goldswitzerland.com.
All right. Well, Matthew Piepenburg from goldswitzerland.com and von Greyerz, thank you for joining us again here on Liberty and Finance.
My pleasure.
Now through Monday, April 7th, in honor of Silver Squeeze 2.0, for any Monster Box of Silver Eagles, we'll give you 2 additional Silver Eagles at no cost. And unlike some other Silver Squeeze deals, there's no limit. So if you purchase 1 Silver Eagle Monster Box, you get 502 Silver Eagles. If you purchase 10 Monster Boxes, you're getting a full tube of Eagles for no cost. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.